What an afternoon it is for the Bank Nifty. And literally that, despite the fact that the advanced decline ratio may have narrowed a little bit market-wide, I think there is strength from the lows of the day, and that is helping the index stay well. This is the hero of the moment. Let's get the intraday of the Bank Nifty for you, and you will see what I'm talking about. There is a bit of gain that has come in the last 30 to 45 minutes of trade, if I'm not wrong, on the Nifty Bank. Right here. This uptick that you're seeing. And from the lows of the day, it's been a remarkable up move. So good going really for the Bank Nifty, leading the markets, or keeping the markets afloat, if you will. Bring up the mid caps and the small caps. Remember, the market breadth has been positive all through the day today. So mid caps about 0.8%, small caps 0.87%, quite unlike yesterday. Mid caps and small caps have done better. So while I said in the morning that it's very likely that large caps may outperform SMIDs, that's not quite happening. So Hersh will probably have a lot more to talk in terms of stock-specific movers. But let me try nevertheless to get in the heat map and show what's moving on the index. A bit of Metallica at play for sure, but Wipro, a hero mover, about 2.5 or 3.5%. Bajaj Finance 2.5% ahead of the Bajaj Housing Finance listing, the big one. Brokerages say, or rather analysts say, that there could be about a 5 to 10% upside for Bajaj Finance if indeed Bajaj Housing Finance lists about 100% premium. FinServ 2.5% too. IndusInd Bank about 1.33%. Axis. And then, like I said, Tata Steel and some of the metal names have not done too badly. What's not done well? SBI Life, HDFC Life, Adani Ports, NTPC, ITC. So it's spread across, but yes, life insurance and FMCG seem to be taking a bit of a backseat. But really, Hersh, it's not as much about what's happening in the large cap space. The action firmly at the broader end of the spectrum.
Absolutely. Let's pull up the BSE 500, see some names which are buzzing, at least in trade as we speak. There you go. Some good buzzers. Linde India, one of them. Home First Finance up 6.5%, very similar to, in terms of reasoning, pretty much all housing financiers doing fairly well in trade, at least as we speak. But those are some buzzers. You're seeing Zomato as part of that list as well. But let's quickly go on to stock-specific action. Let's focus in on that because we'll talk about that pretty much through the show as well. First off, Panacea Biotech locked in upper circuit. You had DFC commit $20 million in terms of a loan to the company for expansion, quite substantial just in terms of the size of the company, because it's a smaller company in those terms. You're looking at HG Infra doing very well again in trade, yet another order win, 716 crore order win for a 10,000 crore odd market cap company. Doing well, 4% higher in trade. Nazara Tech, yet another acquisition, keeping the stock buoyant, up nearly 5% in trade. You have Muthoot, Manappuram, both the gold financiers doing very, very well in trade. Manappuram up 3% as we speak. Muthoot slightly more, slightly more docile in terms of the stock move, at least today. But nonetheless, gold financiers on the back of gold prices doing really well in trade. You have transformers and rectifiers. 114 crore order win, that one in focus. You have Z Entertainment, NCLT approving the settlement with Sony India, that one up nearly 2% as well. Route Mobile, OFS oversubscribed, and on the back of that one is in focus, 1+% higher. PNB Housing, it's been a slow mover, at least intraday, but nonetheless 3% higher. You have Government of Singapore as well as Monetary Authority of Singapore picking up stake in PNB Housing. Small stake, but nonetheless picking it up. So you're seeing some traction there on the back of that. BLS International on, of course, not doing well, even though the announcement was more constructive. UAE-based citizenship acquired for 260 crore. Outside of all of these blocks, let me talk about some of those. Edelweiss Financial, 10% higher on the back of blocks seen on that one. Godrej Agro also buzzing on the back of blocks. Embassy REIT up, again blocks. Patanjali Foods, promoter selling likely, and that's why 3.5% lower. Brokerages, well, Bharti Hexagon in focus on the back of brokerages. Kalyan Jewellers, very, very constructive against Citi this time around, giving us 17% upside prior to this 4% move. Bharti Hexagon, 25% upside. Jeffries this time around, prior to this 5% move today, and we have NMDC as well. 33% upside is what Nuvama sees on NMDC just prior to this 3% move today.
Well, let's see if some of these moves can continue. Let's just first get an opening thought from Kunal Shah of Sharekhan. He joins us right now on the show, now on the technicals. Kunal, good having you. Thanks for joining in. We are ending the week, well, maybe a bit quietly, but you have to admit that banks are doing well from the lows of the day. How are trades positioned on the indices, Kunal?
Good afternoon, Niraj. I think definitely the kind of rally what we saw yesterday on the Nifty expiry, that has set up the tone for the coming week as well. So I think for the Bank Nifty, if I talk about, this has been a big underperformer in the recent times, and now we are finally seeing an outperformance. We are seeing overall that the rate cut scenario has started around the world, so that's what the expectation is here as well, and that's why you are seeing that buying coming in for the Bank Nifty index, or you can say the rate sensitive stock. So Bank Nifty 51,500 was that resistance, which was the hurdle, and now we have surpassed that. So you can now consider this to be a good support on the downside. So my approach would be that if you get any dips, utilize that dips to buy the Bank Nifty index, whatever intraday dips you get. 51,500, 600 will now act as a very strong support on the downside. On the higher end, the targets which are immediately coming, that is 52,400 first, and next is 52,600, 650 on the upside. So clear-cut Bank Nifty could be the leader now, where the underperformance was there. Now this could be an outperformer, and eventually Nifty will slowly follow, and Nifty will also touch the mark of 25,500, 550 in the very near term.
Kunal, what about stock ideas for the afternoon?
See, I think as we spoke, that rate-sensitive stocks is something what we are looking at, and that is where the market is also seeing some action as well. So that is where the entire focus will be. Firstly, in today's trading session, if I talk about a very good volume breakout has come in stock Piramal Enterprise. So that is something which is looking good on the chart. Still more upside left even from the current levels. 1,119.20 is where it's trading. It can go up till 1,150, 1,160 zone on the upside. On the lower end, 1,086 is the stop loss, which one should keep on your downside. All the technical indicators giving a proper confirmation on a buy signal. There's a volume breakout which has happened today. So perfect setup where the NBFC could see some good momentum building up going forward as well.
Okay. Well, so those are ideas, and remember, some of these are flattish, but are likely to or looking good. Kunal, just one quick follow up on the back of this listing of Bajaj Housing Finance. And Hersh will talk in detail about some of the NBFCs and otherwise, but just one particular name, Bajaj Finance. Direct correlation. There's a lot of talk of the kind of upsides that might exist in Bajaj Finance. Again, Hersh, would be lovely to understand from you on that. But first, Kunal, to you. On the technicals, 2.5% Bajaj Finance higher. Is there more in store?
Yes, definitely there is a lot more in the store. If you look on the technical charts, the stock has given a flat formation breakout, which is a bullish setup. And if I look at the targets for the setups, what I've got, the first target what I see on the upside is 7,840, and then eventually 8,100 on the upside. So even if you're expecting from the current levels as well, 500, 600 points on the higher end could be easily visible in the stock on Monday's trading session as well. So the setup continues to be bullish. Even if any intraday dip you get, utilize that to buy, we can see some sort of momentum building up in the coming weeks.
All right. Constructive. And what do you make of the moves in
get that, Hersh, though. Bajaj Finance, I mean, is there fundamentally a correlation out there? If indeed there is a 100% listing, there are some people on the street saying that there probably could be about 5 to 10% upside on Bajaj Finance.
No, absolutely, Niraj. See, I mean, just if I were to break this up, 30% of Bajaj Finance's book pre-IPO was Bajaj Housing Finance. So Bajaj Finance has a book of roughly 3.5 lakh crore, of which roughly 1 lakh crore is Bajaj Housing Finance, so nearly a third. Now, in terms of market cap, 4.5 lakh crore is what Bajaj Finance's market cap is. Bajaj Housing Finance, though, sharply lower. The IPO market cap of Bajaj Housing Finance is around 60,000 crore. And therefore, a re-rating there could, of course, have a trickle effect on Bajaj Finance as well, because you'll get better value. The other piece, though, is also that the market may start discounting Bajaj Finance's holding in Bajaj Housing Finance as a result of this. So, of course, some bit of positivity on the back of the just on the back of the uptick it will see in valuations on Monday, but also we'll have to wait and watch as to how analysts are viewing the holding company discount on Bajaj Housing as and when that comes out. Last off, with regard to the overall valuation, Bajaj Finance is valued at roughly 5 times price to book currently, whereas Bajaj Housing Finance IPO'd at 3.2 times post money. If it were to breach the 100 rupee mark, likely 4.5 times plus is the value that the street will likely ascribe to it. So that re-rating will possibly leave some bit of positivity for Bajaj Finance as well.
But mind you, Bajaj Finance is not our stock of the day. The stock of the day is Bharti Hexacom. The stock is up as Jefferies has upgraded the stock to a buy recommendation. Rucha Johnson to tell us why is Jefferies bullish on the telecom player. Rucha, I reckon it's not just Hexacom. They are bullish on telcos by and large because even Airtel. But this one is up and about today.
You're right, Niraj. So, Bharti Hexacom has been upgraded to a buy recommendation with a target price of 1,600 rupees. But this is largely because Jefferies expects 2 tariff hikes in the next 2 years. If you can bring up the chart on the wall, we'll see that Reliance Jio is expected to make the tariff hike because it was the leader to take in the tariff hikes this time, and that is why Jefferies believes that Reliance Jio is now focusing on monetizing its telecom services. Now it also expects that Reliance Jio has given a target of doubling its revenue and EBITDA in the next 3 to 4 years, and therefore this will require multiple tariff hikes for Jio to reach this kind of target. But moving our focus to Vodafone Idea, now Vodafone Idea is also expected to raise tariff hike. This is largely because Vodafone Idea is losing its revenue market share, and it will continue to lose its market share until it sets up its network capabilities on the back of the recent capital raise. And therefore, to bridge the gap between cash inflows and the dues which it has to pay to the government, it will likely be required to raise tariffs. So that is why Jefferies expects 2 tariff hikes versus 1 in the next 2 years, and therefore it believes that the biggest beneficiaries of these tariff hikes would be Bharti Hexacom, and this has been given a target price of 1,600 and an upside of around 30%, and it has also maintained a buy rating on Bharti Airtel with a target price of 1,970 and an upside of around 20%. So Bharti Hexacom and Bharti Airtel are the favorite picks of Jefferies.
Right. Thank you so much for that, Rucha, breaking that down for us in fair detail. We also have with us Deepan Mehta from Elixir Equities. Apologies for that. Deepan, of course, the entire telecom space has been buzzing over at least the last month or so. Constructive on any names, anything that stands out for you in terms of data points, names, as well as metrics that you would want to track going forward?
Yeah, good afternoon, and thank you for having me on your show. The thing about telecom is that the entire segment has lit up post this increase in tariffs, which was first led by Jio, and then subsequently Bharti and Vodafone also raised their tariffs. And this was immediately after the result, after the Lok Sabha elections. And that has, I think, certainly improved the sentiment in these stocks. Now, when you look at the telecom stocks and where you want to invest it, there's only really Bharti Airtel that is a really big company one can invest in. And now there's Bharti Hexacom also. But eventually it's part of the Bharti group per se. So I would say that from a secular growth perspective, from long-term dynamics, the telecom industry certainly is quite interesting. You're going to keep on perhaps seeing higher and higher yields going forward. And especially Bharti Airtel has more or less completed, and Hexacom also more or less completed their capex for 5G. So cash flows also should improve, debt level should come down. And a big trigger could be that curative petition which is lying in the Supreme Court. If any positive fallout comes from there, then these stocks could move up even higher. So I would say that it's good to be slightly overweight within the telecom space. You could look at Bharti Hexacom also, or Bharti Airtel. I suspect Hexacom is trading at a premium to Bharti Airtel because perhaps investors feel that the scope to improve the earnings in Hexacom is higher. But nonetheless, I think both stocks are equally good. It's just that with Airtel, you get all other associated businesses as well, like the Africa business and some of the other digital initiatives which they have taken. So I would go with, if I had to choose a single stock, I would go with Bharti Airtel. Then, of course, we are all waiting for Jio's IPO or split in Reliance Industries. And that will certainly change the investors' approach and strategy towards telecom stocks, because then we will review Reliance Jio also as a standalone listed entity, and that could make an interesting investment opportunity as well.
Right. Deepan, any view with regard to Indus Towers?
Yeah, well, I think that it has played its role. It has played out pretty well. The threat from Vodafone certainly has come off, and it's a bit of a confusing situation, because on one hand you have stagnating earnings for Indus Towers, yet in terms of valuation, when you compare it to other global tower companies, it is very attractively valued. So you have these counter factors at play over here. For the record, both Bharti Airtel and Indus Towers we are invested in as a measure of disclosure. And right now we are remaining invested in Indus Towers on the hope that because tariffs have gone up, maybe you could see, these companies also get the tower company, Indus Towers, get some benefit in terms of higher yields. And I just forgot to add one more point over here, is that after the, I think, buyback in Indus Towers or some corporate action, Indus Towers has now become a subsidiary of Bharti Airtel. So there could be a situation where their numbers get consolidated over there, and that could have a mild improvement in the consolidated earnings per share of Bharti Airtel as well. That's also one of the factors which one can consider.
Okay, interesting. By the way, some flashes on your screen, just want to highlight them. One, it's a joint statement by Madhavi and Dhaval Butch. They're saying that consider allegations against Dhaval Butch false and misleading, and that the statement says that Madhavi Butch never dealt with any file involving Agora, Mahindra Group, Pidilite or Dr. Reddy's. Remember the allegations that through Agora, some of their clients were the Mahindra Group and others. So the joint statement says that there has never been any dealing or any file involving Vizu Leasing or ICICI Bank after joining SEBI. This is a joint statement that has come in from Madhavi Puri Butch and Dhaval Butch. Of course, the topic hot and the disclosures from their end. Moving back to markets, the sector in focus is also gems and jewelry. The gains out there are palpable. If not as much for a Titan, but Kalyan Jewellers up 3.5%. Some of the others, PC Jewellers, Moti Sons, etc., what have you, some very strong moves there. Senco Gold up 6% as well. So very strong moves that have come in for some of the jewelry names. And this morning we spoke about how that there's a start of a long wedding season up on the anvil, and analysts are anyways baking in better demand trend on the custom duty cut. Citi, for example, has raised the target multiple for Titan to 65 times from 55 times. And yesterday HSBC, if I'm not wrong, and today Citi, if I'm not wrong, has raised the target prices for Kalyan Jewellers as well, which my colleague will just mention in a moment from now. But, just wondering on the charts, Kunal, how do some of these stocks look? Because they are very, very buoyant.
The entire sector, as you mentioned, has seen a robust momentum in the last 1 month or so. So I think if you look at some of the names like Senco Gold or Kalyan Jewellers, the rally has been very steep. So if you have caught it from the lower levels, you are riding the rally. Fresh entry at the current levels is something which I will not be comfortable. However, one stock which I would like to highlight over here, where the move is still pending on the higher end, and that is Titan. Titan, if you can see, has just started to outperform from the lower end. So 3600, which was the resistance for the stock, that has been broken out decisively. So at the current levels, 3780 is where it is trading. So almost a 150-200 point maximum downside is what I can see in the stock on the chart levels. And I'm expecting this rally to continue to new all-time high level for Titan. So the technical targets which comes for the stock on the higher end, first will be 3960 on the upside, and second one will be 4200 on the upside. So clearly, if you can see, there's still a lot of momentum which is left in Titan, and this could be the one again catching up with the rally what we have got in the other stocks as well.
Okay, let's stick with gold because it's glittering, and so is Kalyan Jewellers after Citi maintained the buy call and raised the target to 770 rupees a share. Varsha joins us to tell us more about that note. Varsha, Kalyan, but all the other jewelry stocks also a buzz on the back of this note.
Well, yes, Hersh. So shares of Kalyan Jewellers are up. Actually, if you see, 33% in the last 1 year. But Citi believes that there's more steam left. They've maintained by an increased target price of for rupees 770 versus 650 earlier, which implies an upside of 17%. Now, this target price is based on 60 times the expected earnings per share for June 2026, which is set at an 8% discount to Titan, which has a superior profitability, scale, balance sheet, and more importantly, track record. Citi's optimism on Kalyan Jewellers rested on better demand trends and cut in the custom duty. As we all know, in the Union Budget 2024, Finance Minister announced a custom duty cut on gold and silver to enhance domestic value addition in gold and precious metal jewelry in the country. Now, the target multiple is set at 60x versus 52 times earlier, given broader re-rating in the consumer discretionary sector. Although Kalyan's, if you see, financial performance has been bit volatile in the recent years, but Citi believes that there's ample room left for the stock to re-rate, provided there's a steady execution. Although certain factors related to specific stocks, like potential selling of shares by private equity or the liquidity may impact the earning, the PE or the valuation for the stock.
Okay, thank you for that, Varsha. Dipen, views with regard to some of these jewelry stocks flying away. TBC is up 20%.
Yeah, I think they all have got wings over here. And for so many years or quarters when these companies are listed, there was a huge arbitrage or a valuation gap between these listed jewelers and Titan. And now finally they are playing catch up. End of the day, these are the poor man's Titan stocks. And with Titan kind of slowing down, feeling the pressure of competitive intensity, call it base effect, call it mild consumer demand issues, these companies have come back into focus. And investors are looking for new consumption-oriented ideas. And I think the new listings certainly have caught the imagination over here. So you may see these companies also do pretty well. But I think they have played out pretty fine. And I'm not comfortable with the valuations of these companies. End of the day, I have not seen, even after listing of these companies, I have not seen that kind of secular growth momentum which we saw in Titan. So I'm not prepared to pay a higher P multiple. But for the time being, I think they are great trading ideas. And we have a wedding season coming up, which should be exceptionally good. So these companies also should do very well. And there's no doubt that one very important trend which we have observed in the last couple of quarters is the actual volume of business or the growth rate of this tier 2 jewelry companies has been higher than Titan. It was always otherwise Titan being higher than these companies, but that seems to have got reversed. I don't know whether it will continue or not, but I think a lot of the upsides have got played out and these stocks are no longer as cheap as they were a few months ago.
Okay. Dipan, point well noted. And thanks for bringing it up. But so I'm just trying to get clarity here. I heard you mention that you will not give the multiples that were given to Titan to the others and that they've run up as well. So therefore, imprudent to buy or put fresh money to work into these names is what you're saying?
That's right. I think you summarized it pretty well.
Okay, I did. Great. Okay, fair call. Thanks for that, Dipan. But Hersh, come in because it's not just the jewelry companies, the gold loan companies, because of gold price hikes, have also done well today.
Well, yes, they are buzzing in trade. We did highlight some of those at the start of this show. But gold financiers in general have been in focus. If you look at the last 24 months, the way in which gold has rallied, there you go, gold prices. September 2022 at $1,633 an ounce. This is prices basis ounce, international gold prices. The rally has been very, very solid. And some of these gold financiers have moved alongside the way in which gold has moved, especially Manappuram. Manappuram also the lower valued of the two between Manappuram and Muthoot. So why does that typically happen? Because growth has been extremely strong. Let's take a look at the size. The book size of Manappuram, March of 2022, roughly 30,000 crore. And Muthoot also very similar kind of trajectory. So 50% growth for both of these. You look at the kind of growth that they've clocked. Manappuram from 30 to 45, Muthoot from 65 to 98. So just the kind of tailwind in terms of growth that we've seen kind of starting to reflect on both valuations as well as the run-up in the stock price. So talking about valuations, Manappuram at 1.25 times price to book. Muthoot, of course, the more expensive of the two. The rally has been lower in Muthoot as well. And the 5-year average, Manappuram is still higher than what it is currently. Muthoot, of course, has flown away in comparison to its 5-year average, at least 10 to 15% higher in terms of 1-year forward price to book versus its 5-year average. There you go. That's Muthoot currently 1.8% higher. And if we can pull up Manappuram, that one's really flown away. So that's 3% odd higher. Depend if I can come back to you on this one. Gold financiers, of course, we spoke of jewelry stocks, but gold financiers in particular, growth is extremely strong, especially the Q1 number in particular was very impressive. Do you expect this tailwind to last, and is this a better play than some of the other jewelry stocks that you are slightly more dovish on?
Yeah, you're right. I think certainly there's valuation comfort for these gold financiers, Muthoot as well as Manappuram, and frankly, I think our preference would be for Muthoot Finance, which has withstood the stress in the sector far better than Manappuram. And Manappuram is now not just gold financing, it is also microfinance and several other finance products, and that's a large portion, I think 30-40% of their loan book, and that's growing faster than the gold loan book. But end of the day, what we are finding even in gold financiers is heightened competition from a lot of the banks as well. So one needs to keep that in mind. And it's not as I would say, rosy a business as it was maybe a few years ago. So I would say that when it comes to NBFCs, you have choices. And I would say that microfinance is a better choice than gold financiers. Although one should brace yourself for a couple of soft quarters because of higher provisioning. But I do feel that when you take a 3-5 year type of a view, I would say that microfinance companies are still the best bet within the niche NBFC space. And gold financiers, we have seen a lot of volatility in their earnings, and that may perhaps justify a lower P multiple. So I know that gold prices have gone up, but as I said, the competitive intensity is pretty strong. So I would give gold finances a pass. Within the NBFC space, despite poor performance in last quarter, we are quite positive on the microfinance companies.
Okay. Kunal, before I come to gold financiers, let me try and ask you on TBC, what's up over there just with regard to the traction that we are seeing today, 20% higher?
Yeah, I think overall we are seeing that the rally has been very sharp. If I just look at the past 4 months, from almost 100 rupees, the stock is now at 327. So clearly a steep rally what we have got, nothing to do so at the current levels. If you are holding from the lower levels, continue to hold it, keeping a trailing stop loss of 303 on the downside, but no fresh entry at the current levels.
And on some of these gold financiers, the rally has again been quite solid, at least if I zoom out a little bit. And of course, given the kind of Q1 growth number, the rally since then has also been strong. What's your take on some of those from a technical perspective, Kunal?
See, I think definitely both. I think Muthoot and Manappuram both have seen good amount of attraction in the last 1 week or so. Specifically, if I talk about Manappuram, this is one which still has a room upside which is left. So clear cut, that could be a buy from the current levels. A good on the verge of a breakout stock. 220 is the immediate resistance what I see on the upside. Once that is taken out, we expect 235, 240 levels on the upside easily. So clear cut, Manappuram is something which would be in the buy favor from the current levels. Lower end support is at 201. So as long as 201 is not breached, we expect this momentum to continue in gold finance company.
All right. Thanks for those views. Let's take a quick break. On the other side, we're going to take a closer look at Samvardhana Motherson and the top BTST picks, of course, this Friday afternoon.
Back with India market close right here on NDTV Profit. Banks are holding out. The rest of the market quiet. India Volatility Index or VIX is down about 5%. Though I must say the Nifty Small Cap Index and the Mid Cap Index is doing okay. And Nifty IT is certainly packing a punch. But amongst all of this, it's important to highlight a stock on our radar, and that's Samvardhana Motherson, where BMW is flagging off demand concerns by snipping its 2024 outlook. Citi stamped the stock as a sell, painting a gloomy picture. My colleague Puneet, who tracks the space closely and the stock closely, joins us now. Puneet, now there would be some positives, some negatives for this one. Outline it for us.
Yeah, definitely. So, it is, of course, one of the biggest companies in the auto component space. It has been operational for the last 4 decades and essentially is the king of the auto component space across the world. Now, the thing is, one of the biggest advantage of the bull case or bear case scenario that we're trying to paint a picture of the company is, of course, that we mentioned that its biggest component maker by revenue, roughly 1 lakh crores of revenue is what it does in just one single fiscal year. And that essentially paints it across the verticals that it operates in. But of course, there are some, negative points also for the same, in this particular outlook is that for the next couple of financial years, the weakness in demand is one of the key factors that might plague the company and its growth going forward because of the high base that it operates at. Another key issue that's plaguing India right now as well is the inventory buildup from the passenger vehicle makers. They are expecting that this year is going to be a very slow mid-single digit growth of just 4 to 5% expected. But because of the inventory buildup every month in the last 6 months of this fiscal year, it is expected that next year also will need a very big boost. And that also hasn't come in this particular new scheme of the PM E-Drive for the electric vehicles as well. Now, if we move forward and look at the next, bull case scenario for the company is, of course, that is one of the biggest exporter of auto components from India. Now, of course, it exports to over roughly 70 countries, with Europe and the US being one of the major, export nations, as well as Germany because of the powerhouse that it has of Mercedes as well as BMW. Now, this also comes with a negative bias as well because, as we mentioned, that the poor export outlook, especially from the likes of BMW that they've flagged right now, that the guidance has been cut and they are mentioning that deliveries might actually fall in this particular year. That's another key negative for export heavy companies such as Motherson. Now, when you move on to the next point of company being a diversified, having business presence across the multiple vertical of auto components. Now they are present in vision system, doorways, sensors, headlights, you name it, and the company has been present there, and they've expanded each segment over the last 40 years that it's been operating across multiple acquisitions in geographies that they've done. That's, of course, worked very positively for the company to reach 1 lakh crores of revenues. But when you look at, the bear case scenario of the company is, of course, that this revenue has been given a very high multiple over the last couple of years. And now that the valuation is starting to get to it because of the slow growth, currently, Citi has come out with a note today. They see that FY26 P of the company is roughly around 32 times price to earnings when you compare to an industry average of roughly about 23 times price to earnings. So there are multiple companies now that are operating in the space. Endurance, Uno Minda, Minda Corp have scaled their presence a lot in the last 2 decades, and you have more choices as an investor as well. So that could be one of the plaguing points going forward. Finally, on the financials, FY24 margins were the highest for Motherson over the last 5 years, which was the last industry high cycle that we saw in FY19. Post that, it was 5 years of gloomy picture for sales, and that doesn't augur well for auto component companies. When you look at, the bear case is, of course, on the financials, the net debt. 16,000 crores of net debt for the company. They have mentioned that, their ROCE targets are 40% without the acquisition that they do, but that target has never been met over the last decade. So overall, valuations are not so comfortable for the company, and the outlook seems gloomy on the export side. Back to you.
All right. Thank you for that, Puneet, breaking that down in quite a detailed fashion. Thank you for that. Dipan, if I can come to you, what side of the fence do you sit on where Samvardhana is concerned?
No, it's not an easy company. It's quite a complicated company with so many businesses and so many operations globally. And if something is doing well, something is doing badly. And then they, of course, have the upsides from acquisitions, which they keep doing from time to time, turning those companies around, improving the return ratios. They have undertaken massive expansion in US also. And now those plans also have started contributing positively. So in a sense, it's not a straight line for such a company. And within the auto ancillary space, I think it's better to be invested in the local auto ancillary companies, which are focused more on the domestic auto industry. I would say that although those stocks like the likes of Sona BLW or Uno Minda or Minda Corp may be more expensive, but I think that long-term prospects are better than SAMIL, where there's a lot of uncertainty and volatility in earnings. But there's valuation comfort on SAMIL. But as I said, I think as an investor, I'd remain invested in SAMIL as well. But from a fresh investment perspective, I think we are glued on to some of the other, companies over there. And I would just like to mention two interesting plays within the auto industry, which are at reasonable valuation and which are trying to metamorphose themselves and get more and more into the EV space. And of course, their main customer, Bajaj Auto, is also doing well. So those two are Endurance Technologies and Varroc Engineering. Especially Varroc Engineering looks quite interesting now that they have, kind of exited from the loss-making, I would say, stress-creating European subsidiaries and now focus totally on the Indian market. So both these companies, I think they could be the dark horses within the auto ancillary space.
Okay, so Endurance Technologies as well as Varroc Engineering are a couple of names that Dipan says people could look at when it comes to the auto component space, and Varroc in particular because of straightening their house when it comes to the global piece. Dipan, just one quick follow-up on Endurance. Across the product portfolio, the order book is not a constraint at all. Could execution or valuations be a problem or not quite?
No, see, I think the biggest customer for both these companies is Bajaj Auto. And clearly, Bajaj Auto has gained market share in the last few quarters. It seems to be a company which is on fire. Products have done well. They have a coherent EV strategy as well. And export markets also should start to pick up for them. So once you have your anchor customer doing well, I think that automatically gives wings to the existing operation. And I think piece by piece, they are trying to grow the non-Bajaj Auto business. And a lot of revenues now come from Royal Enfield as well. And also both these companies have reasonably large size operations to export as well. So I would say that, and of course, the biggest advantage of investing in auto ancillary is that you don't have the risk of the product succeeding or not, as is the case with the OEM. So I would say that, these are great companies to work with. I'm pretty certain both of these companies also have already started supplying or working very closely with Ola Electric and some other new generation EV companies as well. And so it's not just the listed OEMs that they cater to. And that could be a good growth area. And once you get a toehold into that particular business, then you can look at exporting also. So it's a nice, I would say, positive flow or virtuous circle which can take place in the entire auto ancillary industry. But these two in particular, because, I think that they have been laggards if you compare last 4 or 5 year performance. And now I think finally they seem to have entered a new growth path. Look at the quarterly numbers which have come through from these two companies last 2-3 quarters. Pretty decent, I would say.
Dipan, thanks for that. A few stocks which are just doing well, just want to mark a couple of them. So I think there are two buckets today. Aside of metals, of course, one is the Bajaj bucket. So Bajaj Finance and some of the others, and Maharashtra Scooters being a company which has got holdings into some of those entities is also doing very well in trade. Should pull up Maharashtra Scooters too. That stock is up about 3% now and spiking as we speak. Not a very liquid stock, mind you, but active in trade. The other one, of course, is this entire pack of jewelry names. And now I'll add Goldium to that list because there's a bit of a spike, or not a bit of a spike, a really sharp spike that has come into Goldium International as well. Now up about 10% and counting. So really good show there. Kunal, we've spoken about some of the jewelry names, but how about, and you spoke about Bajaj Finance, yes. How about maybe a Maharashtra Scooters or a Bajaj Finserv or any of these related names? Even Bajaj Auto, no connection except for the family piece, but Bajaj Auto also has had a phenomenal run in the last few days.
Exactly. Bajaj Auto is something which has shown us a steep rally in the last 1 week or so. Clearly, if I would like to say another name over here, that will be Bajaj Finserv. If I look at the long-term charts for Bajaj Finserv, 1700 was the clear-cut resistance for the stock. Once it broke above that mark, we have seen a continuous rally on the upside. So if somebody has a long-term perspective on the stock here, I expect the stock to go towards 2100, 2200 mark. So probably you can start accumulating right now. If you get dip, utilize that. Yes, it has rallied a lot, but still the risk to reward ratio from the current level seems to be favorable, where the swing low for the stock is 1815. So 1815 you can keep as a stop loss on the downside, and again look for targets of 2100 on side.
All right. Let's though go to the other pocket that's buzzing in trade. You have home finance here, so all of those in focus as well, and they're doing fairly well in trade today. But first off, just want to highlight that possibly it's the rub-off effect of Bajaj Housing Finance's IPO, which got a blockbuster 64x in terms of oversubscription. QIB, of course, most oversubscribed within the investor lots, and 209 times oversubscribed, the QIB component. NII 41 times oversubscribed. Retailers just about 7. Employee 2x and shareholders 17.5x in terms of oversubscription. Now, this has of course released around 4.2 lakh crore, which was what the total subscription was by all investors combined for a 6,560 crore IPO. Largely 4.1 odd lakh crore has been released because of non-subscription. So initiation of refunds expected to happen or already happening today as we speak. Therefore, look at some of the buzzers here. India Cements maybe not, but Aptus, Home First, 3.5% and 6% respectively. If we were to take some of the others, there you go, Aadhar also up 1 odd %. And if you look at some of the others as well, pretty much across the board, all housing financiers doing very, very well. There you go. You have Repco Homes up nearly 3%. You also have India Shelter Finance up 4.5 odd %. And pretty much that entire bucket doing well. Now, in terms of valuations and how they stack up, you have Bajaj Housing, one time forward. This is computed, please. So bear that in mind. 2.9 times price to book 1 year forward. Aavas and Aptus are 3 times plus. Of course, this may undergo some re-rating basis whatever happens on Monday at open. But you're looking at an Aadhar which is around 2.9 times. PNB Housing, after the very strong rally that we've seen in PNB Housing, is at nearly 2 times price to book. This is all 1 year forward now. And that's how it's really playing out in terms of valuations. But Dipen, let me come to you. Just with regard to housing financiers, again, we've seen real estate see a real rally. Rates expected to come off. Is this the pocket that has been ignored for a while now, even though growth has been extremely strong and continues to be very, very strong? But before I go to Dipen, let me first go, because we spoke with Home First Finance as well yesterday. And let's go and listen in to a slice of that conversation.
So any discussion on growth runway always starts with the most cliched statistic, which is the mortgage to GDP ratio in the country, which is currently around 11 to 12%, and which is obviously much lower than most of the countries in the world, whether you consider the developing countries or even developed countries. It's a low figure. And different states within the country itself are at different levels of mortgage to GDP penetration. So the more developed industrialized states like Tamil Nadu, Gujarat, Maharashtra, they are at higher levels compared to the country. And the less developed states are at lower levels. So which basically or clearly indicates that there is a growth runway for affordable housing or the housing industry as a whole. As per capita incomes increase, as the GDP increases, the mortgage penetration is also going to keep on increasing. And even if we look at say a moderate penetration of say 25 to 30%, which is where China would be today. It is a very, very long runway for the housing finance industry.
Home First was up nearly 12% at the top in trade today. Just happens to be that we had a conversation with them. But let's and they've guided for a 30% growth here. When I spoke with them, very confident with regard to the growth runway, suggesting that we'll continue to grow at 30, not just for 3 years, but even beyond. So just with regard to one, the growth runway, and two, valuations not looking incredibly expensive given the kind of growth that they are looking at. Do you believe that this is a good place in the market to be at this point?
Yeah, absolutely. I think, and Bajaj Housing's listing also will lift all of these companies, because then they will get benchmarked to the price to book of Bajaj Finance, which is, of course, the market leader, a significantly higher, bigger company as well. And it does, Bajaj Finance will fill the space which was left void by HDFC. Now that it's part of HDFC Bank. So a lot of these companies will take their valuation ratios from there, and which is what is being reflected in the stock market as well. But yes, I think that rather than the traditional home finance company like LIC, Canfin, Repco, I think investors' fancy has been caught by these new generation housing finance companies, where they see a better runway for growth, because they are looking at segments of the market which are unexplored. Typically, they are looking at low-income borrowers and low-cost housing, the new listings like Home First and Aptus. And there's a great runway for growth. If you remember, there was a company called Gujarat Rural Housing, which became part of Bandhan. And that was focused on rural housing, and that did exceptionally well till it got merged. So that's the kind of business model which they are following. And I think that it's got great dynamics. The only real, I would say, risk factor with these newly listed housing finance companies is they haven't really seen a crunch time when the NBFC sector was really under stress post ILFS. Bajaj Finance, of course, had seen it, as have many other NBFCs, but I'm not sure the newly formed NBFCs have seen that tough period from 2018 to 2021, first for the ILFS crisis, then the COVID. And I'm not sure how their NPAs performed at that point of time. So that's only the risk factor. But, on the whole, I think they are great growth stories. And certainly, I think investors can be overweight in those stocks, especially new listed, new generation housing finance companies.
Okay, yeah, I mean, you're absolutely right there, Dipen. Just with regard to testing of the book, not really happened. And maybe that's one thing to bear in mind. Thank you. Kunal, let me come to you with regard to some of the housing financiers before I come to you for picks and closing strategies. Quickly, any views with regard to some of these names? Any names in particular that you're liking on charts?
I think overall, if you look at one stock which I would like to highlight over here is Ashiana Housing Finance. I think the stock has seen a good bit of rally in today's trading session. But if you look at the technical charts, the stock has bounced back from a very critical support of 320, 330 zone. So probably 360 is where it is currently trading. If you get any dips towards 350, 340 zone, that could probably give you a better risk to reward ratio over here. So buying that zone, keeping a stop loss of 320 on the downside on a closing basis, I expect this to at least move towards the levels of 400, 420 in the very short term. So Ashiana Housing is something which is looking very good on the chart, a perfect reversal candidate from the current levels, and a perfect buy signal which has been given by the technical indicators as well.
Okay, keep an eye out for Ashiana Housing. That is the top BTST or buy today, sell Monday idea, if you will, from Kunal. So that's to be kept in mind. Dipan, before we let you go, a lot of craze around pharmaceuticals for sure. Jubilant Pharma, Nova, and a clutch of other names, very, very active. What are your thoughts?
Yeah, I think that's a very interesting sector. And we are looking for ways and means to get overweight within the pharma sector. Purely because I think certain dynamics have changed in the US generic market, and they're getting better prices also for existing products. Input costs are low, so therefore formulation companies have done pretty well. I would go with the market leader, Cipla, Dr. Reddy's, Sun Pharma. I think there's decent safety over there and good growth numbers one can expect over the next 2-3 quarters. But it's a very big industry. And there are many companies over there, some of which follow a differentiated business model. For one mid-cap stock with usual disclosure which comes to mind is Kaplan Point. It's a company which focuses on the Latin American market, great track record, entering in the US generic space as well, which could be a good growth driver. And then there is Ipca, which has acquired Unichem, and now they are trying to enter the US generic market through that particular acquisition since their problems were there a few years ago with the US FDA. I think Ajanta Pharma, which has been a fantastic performer for the last decade or so, that also merits a mention over here. They're also a very aggressive player, and they're also trying to grow the US generic business. So I think you will get many winners within the pharma space. And the best thing is that gradually, I think the US FDA compliance levels are improving within the industry, notwithstanding the recent problems that Granules has got. But by and large, I think that particular trend is improving for the pharma industry.
We'll leave it at that. Thanks so much for joining in and giving us your perspective. Have a great weekend. Appreciate your time. One final question from my and Kunal to you. 2 or 3 stocks which have bumped up in the session today from the financial space. So IIFL Finance, IDBI Bank, and Bandhan Bank. So kind of 3 names. Any of these on the charts?
I think definitely Bandhan is something which is looking very exciting on the chart perspective. A clear-cut volume breakout, what we have seen in the stock in today's trading session. Even in the open interest data, if I add on, there has been good amount of short covering which has happened in the stock as well. So clearly the shorts have been taken out decisively. Plus there's a buying which is visible in the cash market as well. So a double indication which is giving you that yes, it's likely to rally in the near term. And as we say, we have a bullish view on the Bank Nifty index as well. So this could probably again see some good upside. So on the immediate basis, 215, 220 is what I see on the stock in the near term. The lower end support for the stock is now placed at 203.
Okay, thank you so much for that, Kunal, for joining us this afternoon, giving us all of those views. It's been good to have you. Chief Investing Officer of Axis AMC, Ashish Gupta, will switch over to his views. He's expressed concerns over major IT companies, suggesting that their forward multiples could be higher despite near-term tailwinds such as rate cuts as well as increased IT spending from the BFSI segment. Listen into some of those views.
We are actually still relatively underweight IT services.
Okay.
So we believe that, yes, there is some visibility in terms of bottoming out of earnings and earnings growth. Given the fact that there are rate cuts, there is commentary, particularly in BFSI sector, global BFSI companies, that their IT spending is actually going to go up, and there's been some pent-up demand there. But even kind of putting all that in, we really struggle to see most of the IT companies being able to deliver double-digit earnings growth. If I look at multiples of IT services companies, so despite the fact that many of them were kind of had underperformed, the multiples for IT companies were still about 1.5 standard deviation higher than their historic trading multiples. So I think that has kind of kept us lukewarm towards the IT services companies. Within the sector, we believe, again, there are some companies that have better earnings potential, that are focused in a few verticals or products that are doing better. So we are overweight those. But on a sectoral basis, we continue to be underweight IT services.
And the same applies to ER&D and other forms of tech businesses as well, or is it only IT services?
I think ER&D certainly has much stronger growth outlook. I think companies have consistently delivered better growth, and the outlook is certainly better there than I think the larger cap IT services.
That's, of course, Axis AMC. But let's start wrapping up the markets on a day when the markets have been supported by the Bank Nifty, to an extent Nifty IT too, because the banks may be 0.25% higher. Nifty IT is actually done really well, 0.5% higher. So the two major indices holding the index afloat, metals doing okay, and masking the disappointment in some of the consumer names maybe. Mid caps and small caps doing so well. So that piece is looking okay. Very quickly, just the large caps, and if we can get either the heat map but also the weightage, the points contribution on the large cap end, will be helpful. So as you can see, some of the life insurance and FMCG names have come off. ITC weighing in on the indices as well today. On the flip side, Wipro has done well. Some of the banking names have done well and metal names have done well. Very quickly, let's just get the points contribution before we talk about the mid caps, because I mean this list has stayed okay. But as you can see, ITC, RIL, Bharti, those are amongst the names that have pulled the index lower, and financials, largely financials and IT doing well in trade. Harsh.
Well, yes, they are. Let's pull up the heat map for sectors as well. Let's see which sectors have done well before we go to advanced decline. There you go, Nifty Realty has done well. We spoke about the metals, the Nifty metal, which has done really well through the week as well. You know, even yesterday was the top gainer, and on the back of that, very healthy gains today as well, if one were to contextualize yesterday's gains. Of course, we spoke about IT, banking doing well, but what's not done well? Let's go to the bottom rung. Energy, oil and gas, as well as maybe infra. But outside of that, we are largely seeing a carpet of green. Nifty Pharma is flat, slight positive bias. Let's pull up the BSE 500. But before that, let's pull up the advanced decline actually. Let's pull up the advanced decline if we may. There you go. It's wide, and therefore the breadth of the market extremely strong, skewed towards the advances at the close of this week. The BSE 500 top gainers, top losers if we can. There we go, we've closed. Jubilant Pharma, one of those which have gained well. IIFL was up nearly 8% in trade. Home First doing very well as well. The whole clutch of Bajaj Housing related stocks have done well in trade. Outside of that, you're seeing weak traction in Zomato, which has done relatively very, very well over the last couple of months at least, Niraj.
Yeah, most certainly. But be that as it may, I think it is financials which are the focal point, and with Bajaj Housing Finance listing on Monday, financials remains firmly in focus. But with that, it's a wrap on this leg of India Market Close. Have a great weekend, everybody. Thanks so much for joining in.